Hello and welcome to the latest investment market update. I hope that you're all keeping well and looking forward to the festive season. I'm Brian Morman, Chairman of Brunsdon Financial, and today I'm being joined once again by Mark Shields, Investment Director at Brooks Macdonald. Brooks Macdonald have been carefully selected to manage the Brunsdon investment funds, and using their expertise, the team analyse movements within the market and make tactical changes. We continue to be in somewhat turbulent times. Let's talk about how these affect investment markets. Soon, a new president and administration is to come in the USA. We just had the October budget in the UK, and we have the continuation of deglobalization. Mark, what are your thoughts on the recent election in the USA, and what does this mean for markets and portfolios?
Yeah, hi Brian. Yeah, obviously the sort of election in the US has been, kind of one of the major events of 2024. And in the event, obviously leading up to it, it was expected to be much closer than it actually was. And the reality is that Trump seems to have been given a fairly sort of firm mandate by the US electorate. Rightly or wrongly, depending upon your view, but it does mean that he can carry out or potentially carry out a lot of the policies that he had been talking about leading up to the election. The big question now is really how far he will actually go with some of those things that he discussed prior to being elected. The extent to which he's going to be placing tariffs on foreign countries and disrupting trade, the extent to which he clamps down on immigration. And these are all things that at the moment are, kind of slightly unknown. And it is sort of having a slightly sort of unknown effect, as it were, on markets more broadly. We have seen a bit of a Trump trade develop. This actually started back in the summertime, but it has definitely continued after his election. And this Trump trade has tended to favor a slight broadening out in terms of investor focus. So we've obviously seen a lot of attention on the Mag 7, the mega cap global tech companies. They've continued to do well, but actually some other sectors, such as smaller companies in the US, have caught up. We've also seen pressure continue on non-US companies. For the most part, Europe and China and parts of Asia are all coming under particular pressure. Again, likely due to fears over to what sort of extent Trump is able to impose these tariffs on these nations. We've also seen quite a bit of movement in the bond market, largely driven off of fears or expectations maybe that anti-immigration policies, the fact that deregulation, lower taxes, and potentially higher spending may all contribute to interest rates and inflation remaining higher for longer, known as the terminal rate. And against that backdrop, it has meant that the yields on debt, for the most part in the US, have risen, i.e. bond prices have fallen. So we've seen quite a bit of movement in terms of various different parts of the market. And, again, I think where we go from here is probably going to be determined much more by how far Trump can go with the policies that he's talking about. We won't really know much more about that until after his inauguration in the beginning of next year.
Okay. How do you see this affecting the Brunsdon Cautious and the Brunsdon Adventurous Fund, Mark?
Yeah, I mean, we were actually sort of unintentionally maybe, but what we didn't want to do leading into the US election was position the portfolios for either a Harris victory or for a Trump victory. But what we did do leading into the election was to reduce some of our exposure that we had to areas that we saw at most risk. So we'd already sort of reduced to places like China, and we'd already gone into this period with relatively short duration in terms of our bond exposure. And actually, both of those were the correct calls, essentially. China, despite its earlier stimulus, came off the back of the Trump victory. Equally, those rising yields in the US meant that our shorter duration, which are less sensitive to higher yields and higher interest rates held up much better. And our focus certainly in the cautious fund is to remain on shorter duration debt for the near term. We continue to think that maybe the market got a little bit far ahead of itself, pricing in a very aggressive series of rate cuts throughout 2025. And now the market has more sort of returned to a more sensible expectation of interest rates and the path of interest rate cuts in the US. So that played into our positioning. Also within the Adventurous Fund, that broadening out of investor focus away from the Mag 7 benefited the portfolio quite nicely. We added to US smaller companies earlier this year. We actually topped it up a little bit in the summertime as well. We're quite focused on global, which is dominated by the US essentially. So we've got quite a bit of US in the Adventurous Fund in one way or another. And our themes, especially technology, continue to perform well. We have made a few changes, or we will be making a few changes to the funds off the back of the election. The main one really coming out of our decarbonisation theme. Again, this is a theme that we think from a macro view, a long-term story, we think is very interesting and we still think has legs. But given the possibility of enhanced near-term headwinds induced by Trump's victory, we feel that it's prudent to come out of this theme at least for the next year or two, and then potentially revisit at a point down the line. We've also opted to focus a little bit more on core US positions. So we've slightly reduced our exposure to value bias in the US and moved that into more kind of core US trackers, as well as a little bit more US smaller companies as well. So we have made a few tweaks off the back of Trump's victory. We expect that probably in the near term, US markets will remain dominant. We expect that, other sort of parties seem to be other countries slightly at loggerheads with the US, like China, maybe Europe. Pressure may remain on there, at least in the near term. But again, as I keep saying, quite a lot will have to be determined by how far Trump decides to go come January time. And we may make further tweaks to the portfolios off the back of that.
Okay, well, thank you, Mark, for that overview and thoughts up ahead. And thank you for watching. As always, if you have any questions or queries, then please be in touch with us. Thank you.